Hi, I'm Jonny, not James Bond. And even though we're in Office 007, we don't have a license to kill, thankfully. Although that doesn't mean we don't have a license to thrill, entertain, or even educate. And that's the best license, especially for podcasting. Money Matters is a podcast brought to you by me and by Money Support Group. And it looks at financial hardship and personal hardship, as well as ways to counteract those difficult life moments. If you want to find out a bit more about Money Support Group, then there should be a little bit of information in the description and maybe a link to a website that you can click on. As far as I'm concerned, leading this podcast, I'd love you to like, comment and subscribe. It would mean a lot to me, and also Money Support Group and the team that supports me with Money Matters. Hello and welcome to another episode of the Money Matters podcast, or YouTube feature, or whatever you want to call it. I'm Jonny again, and on behalf of the Money Support team, I'm now joined by Daniel Jackson. How are you doing, Daniel?
Yeah, good afternoon. Doing well, thank you.
I see.
Thanks for having me on.
I've left it open because, of course, usually I butcher the introduction of a guest, or I have done in previous podcasts, not necessarily on this one, but in my own experience, I find it better to let the guest introduce themselves in a bit more of an expansive way. So, Daniel, tell us a bit about yourself, what you do and who you work for, please.
Yeah, of course, no problem. So I'm Daniel Jackson. I'm a mortgage and protection advisor. Been doing this for around 3 years now, and I represent a firm called Peer Financial Solutions. They're based in County Durham directly, but hire fully qualified advisors such as myself across the UK. I'm based in Colne, East Lancashire, but I look after my clients across the UK. Prior to that, I used to work for Santander as a customer and personal banking advisor. So I've got a good background in financial services for the last 10 years prior to doing this. Took the plunge from going to personal advising into mortgage advising on my own. So I am self-employed, but it was not a regret that I'd made the leap. Good experience. I'm in my third year now. Absolutely love what I do. So yeah, that's where I'm at the minute. I've recently leased out an office in Burton House in Colne. For those of you who know Colne quite well, it's just above the Althams building in the town centre, opposite the marketplace. So yeah, I've given that a new extra professionalism, I'd say, to my role. Yeah, and that's me basically in terms of the work that I do.
And you're loving the self-employed life then?
Yeah, the flexibility to do things as and when you want, rather than the 9 to 5 routine is what I was used to at Santander prior. It helps, if there's a morning where I'll look after the children or we'll go out somewhere for the day. You couldn't get that in the normal 9 to 5 employment role at all. So yeah, it's nice to have that flexibility. Work your own hours, be your own boss. But yeah, work smarter, not harder.
That's very good life analogy. They should put that on LinkedIn. There's so many influencers these days that put in the.
I think that's where I get it from a little bit, but it's so true. Being your own boss has the added advantages. It comes with a lot of stress, but I think if you manage your time effectively, it works. So.
Okay,
yeah,
well, fantastic. You touched on your housing expertise. It's great, really. It's very interesting because obviously been a big thing, really. I mean, when coronavirus came around, I was reading so much that was saying there's going to be a crash in the housing market. Prices are going to come flying down, and then all of a sudden that isn't the case, and it does seem to be. Well, it doesn't seem. It is, of course, related to the stamp duty tax being put up to 500,000. Now, I'm quite aware of what this is, and I know certainly my employers are quite aware of what this is, and so are you. But for anyone who's in layman's terms or not aware of stamp duty tax, maybe people younger than myself who are thinking about it, just explain what that is and why it was raised to 500,000.
Yeah, certainly. So stamp duty land tax is simply the tax that you pay on a property that's worth a certain value. Now, prior to the stamp duty threshold being introduced by Rishi Sunak, you would, as a home mover, have to pay stamp duty above the first £125,000. When the pandemic hit, Rishi announced that the first £500,000 of a property value, you would not have to pay any stamp duty at all. That included first-time buyers and home movers. So what that did essentially, it did help the housing market in terms of the house prices boomed essentially, and the main sellers took advantage of the fact that they could save up to £15,000 in tax savings, which is a heck of a lot of money. So that's where it came about, and that threshold has just recently ended up until the 1st of July. It's still there, the stamp duty land tax threshold, but they've reduced it down to the first £250,000 up until, I believe, the end of September.
Then it
so
goes
from
back
the
to
1st
standard,
of October, we'll go back to the standard rate,
Yep.
2% on the first 125,000, and then increase from there onwards. So yeah, it's in a way, it's been a blessing to the housing market for those buyers, sellers in particular, because it's increased the house price growth. So sellers are getting a good incentive. Not so much in terms of first-time buyers. It's not helped many first-time buyers. It's helped quite a few, I'd say. But if house prices are going up, first-time buyers are struggling to save that deposit. It kind of evens itself out a little bit.
And there was an average rise, wasn't there, from 2019 to 2020? Everyone's seen that plummet, and because of the that stamp duty change, that actually an average rise, which was quite incredible, isn't it, given the situation that we're all in?
Yeah, we're seeing a lot of first-time buyers in particular making offers on properties where 7 to 8 to 9 people were offering above and beyond the asking price. So there was real demand for it. I think the issue, what I'm seeing now, is that the supply has gone down quite drastically because people are fighting over these offers and the demand for properties there. It's very difficult to agree an offer and asking price.
Yeah,
you have to be very lucky. You have to be in there firstly to get what you want.
No, absolutely. Yeah. First of all, as well, I keep sort of glancing at my own camera, and I know I touched on this before we went on. The reason why I'm in such casual wear is because it's so hot. It's about 175 degrees outside. And,
Plus, yeah,
it's outrageous.
I think we picked the hottest day of the year.
The hottest day of the year since yesterday,
like this,
I might add. Yesterday was just the same. It was tragically hot. Only they say only the British actually complain, but you know what I do? I am partial to a 20 degrees mild, not too hot, and maybe even a sprinkle of rain. To be honest with you, maybe that just sums up me as a person.
Me too.
Yeah, I don't mind it too much. And also, in case you didn't catch on, Daniel didn't call Rishi Sunak. It's Rishi. First names terms with the with the Chancellor.
Daniel. Oh yeah, well you've got to include your first and second names. I don't know him in terms of face-to-face terms, but yeah, I think it's important to explain, what he did introduce and what the reason was for it. Property is one of the biggest assets to the UK economy. So it kind of made sense for him to introduce it. It certainly helped our business because when you go back to the beginning, when coronavirus hit the pandemic, I was coming into the second year of trading. And my head fell into my hands, thinking, "Oh no, what's going to happen here?" And at the beginning, a lot of mortgage lending were restricting how much people could borrow. They tightened up lending criteria. Your deposits had to be a lot more. So at first, everyone panicked. Myself, lenders, insurers, everyone did. But this stamp duty land tax seems to have, well, from my experience, absolutely grown hugely. The demand is certainly there. It makes sense, and I think personally it was a good thing. I'm sure the housing market and the UK economy.
Sure, many would agree with you. And also, right now when this is being recorded, which might be a different time to when you're listening, so bear that in mind. But so, I suppose while it's at 250, you would expect to see then quite a lot of demand still for houses just around that threshold, 240, 230, because again, you're not paying on top of that fee. Would you still expect to see that demand until at least it hits to the 125? And when it does go back to 125, that's sort of a similar time to when the furlough scheme ends and when lots of the, I suppose, I call it temporary nanny state measures, if you would, or welfare state measures put in place, come to an end as well. So would you expect that to be another challenge for the housing market when that time arises?
Yeah, I'd say so. I mean, from my experience, the demand is still out there. So I'm seeing particularly a lot of first time buyers this year in particular, where first time buyers aren't entitled to pay stamp duty anyway on the first £300,000 of purchase. That's always been in place. But for home movers, yes, there still is that incentive. I think eventually it will dwindle down. I think it'll calm down, if you will. But those that are coming into this threshold now are demanding the solicitors' conveyances to get that stamp duty, land tax rebate done before the 30th of September.
Yeah.
So there's still demand from their side, but I do think things will slow down gradually. But time will tell. I didn't expect to be. Well, I did expect to be busy. I didn't believe how manic it could get. And certainly from the last, I'd say 6 to 12 months of my career, it has been hectic, but in a good way. We've secured a lot of properties for first-time buyers and home movers. And the solicitors that I've worked alongside locally and nationally have worked their socks off to try and get the stamp duty saved for the customers, try and get the completion in time. But I'd say I'm speaking for the solicitors here, where I don't think they'd want to go through another period of meeting those deadlines again.
No, absolutely.
For the customers,
absolutely,
because they were stressed out. They had so much to do.
Oh, I can imagine.
In a short space of time. So.
Although stressed out, but I suppose busy, and busy is a good thing.
Yeah. It's the busy. Yeah, I mean, I work with quite a few local solicitors, and they've all said the same thing. It's been the busiest. We're not complaining as such, but it's the busiest they've ever been in their careers.
Sure. But okay then. So but in a world that is post-COVID, whether that be in a few months, whether that be 2075, we don't know.
No, I hope it's sooner than that.
Yeah, I hope it's sooner than that as well. We will wait and see on that one. But supposedly when we get there, what do you think of the state of the housing market as you imagine it might be for younger people? Because it's often many younger people, myself included, and people younger than me, face the reality of renting for a long period of time before they actually can put up the amount to then start thinking about getting a mortgage, getting a house. What are your thoughts on the housing market generally when we put coronavirus to the side?
I think going back to what I said earlier, the stamp duty land tax definitely benefited the housing market in the UK economy. However, for some first-time buyers, not everyone, it kind of penalised the situation. So I think that the housing market in general, I think it's still growing. There's still demand there. It'll calm down eventually. But going back to first-time buyers, there has been incentives, particularly this year, where it's encouraging more first-time buyers to get onto the housing market. So I think if there's more incentives going down the line for those with smaller deposits, I can't see any reason why the housing market will decline. And I think I'm a positive person. I think the only way is up on that basis. Who knows what will happen in the future? Who would have thought we'd be in a pandemic from February, March last year to where we are now? I've seen signs since the beginning of the year that the only way is up for the housing market, and long may it continue.
Well, to be fair, I was actually working in China just before the pandemic, actually. So when I came back, I could sort of tell. Actually, I didn't think it'd reach our shores. In fact, in China, I thought it'd be done within a month or two. How wrong was I? How wrong were we?
It's strange. I remember just before the pandemic hit, going around Manchester. I was travelling to see family, and I was seeing a lot of people in the outside just walking along with masks on. This was before the pandemic hit, but they got the knowledge that something wasn't right, and they felt safer doing so. And it was the first time I thought something's not quite adding up here. And and then yeah, as the weeks went by,
Madness.
lockdown after lockdown. I mean, we could talk about lockdowns all day.
We don't want that.
No, I second that. I definitely don't want to go back into another situation of another lockdown. Yes, cases are rising, but 100% do I not want to go into another lockdown.
Do you speak on behalf of the majority of us?
I'd say so. Yeah, I'd say so. I think we've done our time, if you will. We've served our sentence, if you will. I think we've been very lucky in terms of, a lot of people have been able to work from home successfully more than others.
I mean, yourself personally, you would have been able to work from home, and it can be done remotely, can't it? Of course,
it can. And I saw a lot of people in the industry and other industries that were comfortable as long as they had a laptop, decent internet connection. It was fine to do, and I did work from home for the past, I'd say, 12 to 15 months on and off. I did work in some co-working space in Burnley through the Landmark from time to time. So that you'll know for yourself, working under the same four walls in a house, it was a struggle, and it's too much of the same routine. So it was nice to get out the house and see other businesses from a co-working aspect. Similar to where you're based, I believe you're at the Northlight. Yeah. So similar thing to where I was I've been in Burnley. The problem with working from home, I'd say, was the distraction of family, children, pets, things like that.
Sure.
It wasn't seen as professional in my eyes to a lot of clients that I was speaking to from time to time, although they were great. I just felt that I needed that incentive, that privacy to get things done.
Absolutely.
Hence why I've managed to lease an office out in the centre of Colne, near where I live.
Yeah.
So it's just ideal in that aspect. But I've done well during a pandemic, and I'm sure I will do if anything ever comes up again. But hopefully not.
Hopefully not. Fingers crossed.
Yeah, fingers
absolutely.
Crossed, yeah.
And just to take you back to something you were mentioning, actually, we're talking about first-time buyers and younger buyers of houses, and you were talking about incentives and schemes that have been put in place. Now, apart from the stamp duty tax, of course, that was the big one. Being increased. Can you tell us a bit more about some of those schemes, or some that might be coming into place over the coming months? I've seen a few myself.
Yeah, I'd probably speak about the things that are happening now rather than what will happen in the future. Sure. Who knows what incentives come out? Mortgage lenders always change their terms and conditions anyway. So if the government announces something new, or the mortgage lenders do, we'll be the first to know, and then we share that out to the wider population. Currently, for first-time buyers, you've got the Help to Buy scheme. That is particularly useful for new builds that you will see everywhere at the minute. It seems to be on every street corner. So the incentive for first-time buyers is that you can place a 5% deposit of your own money, or if it's gifted, inheritance, things like that, that's absolutely fine. And the government will loan 20% of that under an equity loan scheme. So technically, you would only need to get a 75% mortgage on the property value that you'd look at. So it's a great incentive for those with smaller deposits. That is for first-time buyers up until, I think, in 2023. Can't think of the month offhand. I think it's the heat. However, they've restricted the amount that you can borrow on a new build in the Northwest to 224,000. So be wary that scheme is only up to that maximum amount for the value there. So there's good new build schemes there. So that's a Help to Buy equity loan scheme. The mortgage guarantee scheme was announced earlier this year, where the guarantee would back the scheme for first-time buyers with smaller deposits, 5%. And it's for those that have got some, credit-worthy households that are unable to really access home ownership. So there is reduced availability for that. There's not many lenders that took out the scheme. That again is available up until December 2022 of next year. How it works basically is just simply they can put down a deposit of up to 5% on a property worth up to £600,000. That includes home movers as well, so you don't have to be a first-time buyer. What the guarantee does, it compensates mortgage lenders for a portion of net losses suffered in the event of saying that buyers can't repay their loan. So in the event of repossession, someone taking over the house, the guarantee applies down to 80% of the purchase value of the guaranteed property, covering 95% of those net losses. So really, it's there as a risk, really, in terms of first-time buyers that have lower deposits and no experience of home ownership. But it's a good scheme. It's getting more people on the housing market, so that's always helpful. And lenders are bringing back 95% loan to value mortgages, i.e. simply criteria is put a 5% deposit down, you will get 95% guaranteed on a mortgage on any type of property. I would exclude flats, particularly new build flats. They need a higher deposit for first-time buyers. But generally, you'd say your main three are Help to Buy schemes, the mortgage guarantee scheme, and lenders are coming back into the market with 95% mortgages for those with smaller deposits.
That's great.
So this, compare it to last year. There was nothing. First-time buyers were really hit hard at the fact that, they come to me and say, "Oh, I've got 5-10%." It was really an issue. I remember going back to, I think there was only, this is summer of last year, I think there was only from my panel, HSBC and Nationwide, that were offering 90% loan to value, i.e. a 10% deposit for first-time buyers. So the demand for that was amazing for them. But when it came to applying on the systems used to crash because there were so many advisors and brokers going, "Oh, this guy wants 10%, this guy wants 10%. And there was a threshold, I remember at HSBC, where if you didn't clock on before 5 to 8 and put the application through, if you weren't successful, you were kicked out until the following day. So that's where it was a real struggle. Had to set the alarm clock quite frequently. So that's where lenders have been more than helpful, particularly beginning of this year throughout the pandemic.
No, absolutely.
More schemes are coming into play.
Yeah, absolutely.
I hope that explains things. I've spoken a lot there,
I thought it was very thorough, and I think anyone who wasn't aware before of the schemes or the intricacies of the scheme, I think you explained it quite well. And you explained also well how it's come into play, particularly within the pandemic as well. So I suppose if there's any light within this pandemic, some of the situations that have been put into play as a result of that pandemic, I suppose that's the small grain of light, although some of them might not be around, as we say, like the 500,000 stamp duty tax, but
of course. But again, going back to the first-time buyer incentive, up to the first £300,000, you don't have to pay any stamp duty at all. And from my experience, I've not seen many first-time buyers, particularly in this area, that could afford, or they may want a property that's over £300,000. Don't we all?
Nice. Oh God, yeah. In London, that's a one-bedroom flat, though, isn't it? I think
it is quite. It is quite. So you do get some bargains up this way in the northwest. Granted. So first-time buyers preferably don't have to worry about that stamp duty. In my eyes, it's more on the case of, can they save that deposit? And nowadays, yes, all you need is a minimum of 5%, which is great. Obviously subject to status and your credit status and affordability checks, etc. But yeah, it's definitely much better this time now than it was last year.
Absolutely. Really burning question I think a lot of people have, particularly younger people as well, particularly some of our clients actually, I suppose, in many ways could be relevant to them, is can you get a mortgage relatively easily despite having debt accumulated?
Yes. The answer is yes. It doesn't mean that you're entitled to these schemes, essentially, because you are credit scored quite heavily. And as I mentioned before, lenders have really tightened up their affordability. What I would stress is, particularly in an initial fact find with first-time buyers, is making sure that you're definitely honest and accurate with the information you give me. When you talk about debt, as long as you're making your payments up to date and you've not missed any payments, that definitely helps, but it reduces the amount you can borrow. So in general, first-time buyers, how lenders calculate affordability simply times their salary or self-employment income by a certain amount. Now, the average at the minute is around 4 to 4.5 times with high street lenders. So say someone was on a, let's say, £20,000 a year salary, times that by 4, that's the maximum amount they could borrow, which is £80,000. Okay. Bear in mind, people with debt, depending on what they've got, they could have credit cards, unsecured loans, hire purchase. It does happen. Depending on the amount that they've got left to pay and how much they're paying, that reduces the £80,000 that they could borrow. So it's all dependent upon how much debt they've got. And it's very much dependent on, are they making the payments on time as well? I think if there's some adverse in the background, and if there are missed payments there from time to time, it doesn't rule them out for getting a mortgage. But what the lenders would say is, well, look, in order for us to treat you right and not make you a higher risk, you would need to put a higher deposit down with those lenders. That's what I'd say on that basis.
No, really well. But I mean, I suppose as a secondary question then, given that, again, there will be some people asking, but what kind of debts really go against me in this situation? Because some will say, well, is student loan really a debt? Because it's considered quite different in many situations as opposed to mainstream debt.
Some lenders do factor student loan into their affordability calculations. Now, if you're employed, more than likely and earn over a certain amount, that'll show on your pay slips altogether as a deduction. So some lenders will see that on the pay slip and say, yes, that is a credit commitment. We've got to factor that into affordability. And some don't at all. Some lenders will factor in unsecured financial commitments such as loans, credit cards, store cards, as I mentioned. But yeah, student loan, it comes and goes with some lenders. Some like to include it, others aren't that concerned.
What's your personal preference on that?
It doesn't matter. At the end of the day, if I see the payslip saying the student loan there, we've got to declare it. There's, it's not hidden. We're not hiding anything. This person went to uni, graduated with whatever, and this is how much they pay back. Fantastic. So to me, it doesn't matter. It doesn't make a big difference in terms of the affordability calculations as to how much they can borrow. Not as much as what I mentioned in terms of credit cards, loans, etc. But on occasion, they have to be factored in. So to me, that doesn't matter as long as we know that, do you pay it? Do you have one? How much is it? And that's it.
Quite a broad range one then. So many people argue, as I touched on this a bit before, really, the pros and cons of renting versus the pros and cons of buying. If you were talking to someone who was younger now, who was umming and ahhing and thinking, oh, do I do this? Do I do that? Which solution do I go for? How would you argue the way of the buying the house?
Good question. I think from my experience, I'd say there's no greater feeling than owning your own home. Rental, I rented for 12 years leading up to buying my first place with my partner.
Where did you live? Where did you rent, by interest?
Oh yeah, so I was brought up in Burnley, Lancashire, most of my life. So I rented mainly around the Burnley area.
Okay.
Near Rose Grove, I was there for a bit. Duke Bar area, which some people go, oh, not the best. However, cheap rent, and it was ideal for work at the time. So I was in those sort of areas, and then I rented a property, a flat in Colne, just to be, again, near to work. But the majority of my experience in Burnley. So going back to those feelings of, renting versus buying, there's no greater feeling for anybody. We can argue this to the cows come home. Owning your own home, is the best feeling in the world. 100%, because you can do what you like with it. It's yours. You don't need to worry about anything. As long as you can afford your repayments, that's great. Renting is dead money, essentially. It is. Yes, you've got a roof over your head, but there's some landlords that won't let you do X, Y, and Z, i.e. do some decorating to it, let's say, or bringing some furniture in which doesn't comply with the building itself, etc. Doing things around the house, around the garden, externally. Some don't mind. Others, from my experience, have said absolutely not.
What about the ones near Duke Bar? What were they like?
Now, at the time, because I was 18. Okay, so I was very young. I was a very young renter. Straight out of college, went into full-time work and studied for my degree as well in the background. Where I was, it wasn't actually a bad place to live in, if you will. The neighbours were very friendly. the rent then for a terraced house, 2 up, 2 down, was just under £300 a month, right? Which I think, thinking back there, was reasonable. Bills were a lot lower as well. So essentially, I was working. I'll be honest and upfront. I worked at Tesco full time, standard wage, lived on my own, paid all my bills, but I still managed to maintain my lifestyle by going out, enjoying what I did at weekends, playing football, socialising, going to see family, friends, you name it. So I didn't ruin my lifestyle by what I did. Nowadays, I think renting is going through the roof. I think.
Oh, it is.
I think so going back to the 1-bedroom flat that I was at in Colne, I was paying nearly £500 for half the space that I had at Cleaver Street all those years ago in Duke Park. So going back to the rental argument, I'd say that there was a stat that came out recently that I read that saying renting has become cheaper than buying your own house. I kind of understand that, because going back to the 95% loan to value deals for first time buyers, the interest rate has increased for those with lower deposits. So when the monthly repayments come into play, yes, they would look a bit more than someone that's renting a 2 up, 2 down terraced house, as an example. However, going back to my original argument, there's no greater feeling than home ownership. And I'm in a position where, I want to help those first-time buyers have a roof over their head and make and have that feeling that this is mine. This is amazing. I love it.
No,
so I'd say there's pros and cons for renting versus home ownership, but I'm definitely in the corner of buying or renting because I've experienced both angles.
It'd be sad if you weren't, because of course that does go under your job description, of course.
Well, yeah, of course. I mean, but yeah, even though the role that I play is essentially buying houses, I've had the background and experience to know what renting's all about. And, I deal with portfolio landlords as well that own several properties across the UK. So I know what sort of rental margins they're charging their tenants, but also what gains they're making from their mortgage. On a buy-to-let basis. So yeah, I can see both angles, but I'm definitely in the buying category.
Last question then. Just for you personally, what do you want to get from maybe the remainder of this year, and then going forward beyond that? What are your general aims?
For me personally, as a business,
just
to keep going.
Just
to keep going. Like I say, the last 6 to 12 months have been the busiest I've been in the industry. And with me being fairly new to the industry, I'd say that, I actually question, am I busy enough? And then I speak to other broker communities, the groups that are online and stuff. And I simply type, I feel like I'm burning out a little bit. I feel like there's a lot of work here for a one-man band. I am a one-man band in that respect. Is this the busiest any advisor's ever been? And other advisors that were coming back to me that have 20, 30, 40 years experience said, absolutely, don't feel like you're not alone in this situation. So whilst it was the busiest period, it takes a lot out of advisors as well as solicitors, as I mentioned, lenders with their underwriting. There's a whole family tree, if you will, in the market that we're in, where we want to keep going. Definitely, we want things to, we're in a good place. I'm always optimistic that I can, and I always challenge myself to do better. So but I think in the next 6 to 12 months, keep going, encourage people that 5% deposits, you can do it. First time buyers think, it needs to be savings. It doesn't. It can be a whole number of things. If the family are willing to gift you a deposit by any means necessary, they've got savings, inheritance, possibly raising money on their own house to gift that deposit that way. There's certain areas there, inheritance. I've already mentioned savings. So there's different factors that does not rule everybody out. But I'd say for first-time buyers, keep saving. Make sure your credit status is up to date. Do not make offers on properties before you know how much you're going to borrow, because I've seen that several times. But yeah, I'd say going back to my business, yeah, let's keep going. Let's, yeah, I love what I do. I love helping clients. I've had that background from Santander that I've brought into my own little community in the mortgage and protection business. So, yeah.
No, smashing.
I don't really know what else to say on that other than, yeah, let's keep going.
Smashing. I always think it's nice to look ahead and plan ahead, but given the past year, it's very difficult to sort of think too far ahead, I guess, with the whole situation.
There is. You're right in what you're saying there, and I think the pandemic actually just made me grab the bull by the horns and just not feel sorry for ourselves as ours is going, oh no, our industry is going to end. What we're going to do, because it could have been easy for some of us to think that. But if you think positively and go, okay, this is what we're working with, this is what we've got available to the current clientele, let's work with it, and then hopefully things will improve. And that's exactly what's happened this year. It's boomed. It's the best industry. It's the best property boom in over a decade.
Yeah, adapted to the situation.
So something's got to give there. There's clearly been a lot of demand. People have wanted to move, whether it's to upsize, downsize. People have come out of the cities into more rural areas because they want more space. So it's going back essentially to what I mentioned before, the same four walls. If you're sick of the same four walls, you move. And fantastic. That's what people have done.
Yeah, fantastic. Good way to end. Put that on LinkedIn. I think that's a winner, I think, to the to the LinkedIn echo chamber. Fantastic. Now, lovely talking to you, Daniel. Wish you all the best with your business in the coming months, in the coming years. Hope you make a real success out of it. Not that you aren't doing already.
You.
Nice one.
Yeah, listen, at the end of the day, I'm doing the best I can, and I'm here to help anybody, whether it's in the local area or further afield. Yeah, it's
smashing.
I love doing what I'm doing.
There you go.
That's the main thing.
If you want the mortgage, you're interested in getting a house, Dan is the man. I think that's a good slogan, isn't it? Good stuff. Fantastic.
Oh, it always works. Yeah.
Anyway, take care, stay safe, and see you on the next feature. Thanks, everyone. Thanks for listening. Well, that's the end of the video. I hope you enjoyed it. Before you go, please make sure to like, comment, and subscribe. Also, check out the website. You should see it in the end description. It will be in our description at the bottom of the video. So please stick around with us, see what we're all about, and hope you tune in for the next podcast. Take care, everyone. Stay safe and have a nice rest of the week.